a month of winter down here in Tasmania. Hope you're enjoying the summer if you're in the Northern Hemisphere. And for those of you in Singapore and Hong Kong, doesn't really matter, does it? It's hot all the time. I better share screen before we go too much further and show you what's going on. Firstly, as always, let's have a look at pound versus the US dollar and see if we're willing to trade a breakout today on the current settings that I have for this. I've got to say, I'm inclined to change them. It was all right, I suppose, when we're doing every day, but there's so few opportunities at the moment to trade this breakout. It is just a little bit crazy. Not that we have to trade every day. Of course, it's not compulsory. Thank God it's not compulsory. Otherwise, we're in a hell of a mess. So what do I see today? Well, I see a very clear potential reversal pattern here. It's what I see. But that's not what we're trading at the moment. We're looking to trade a breakout of the previous 24 hours range, which is the low of which is there, and the high of which is there, plus the range of today thus far, which is all inside that range of yesterday. So no dice for adding to that position. So the range is here. There is the high. There is the low. That would be it there, which gives us a risk factor of 220, let's call it 222 pips. So we've got to get a reward of 1-to-1 out of that if it does break out. I'm sure those of you who know me will know the next thing I'm going to say is I am not going to trade into that low to get 47 pips out of 222 of risk. The high side looks a little bit better, I must say. And if I'm looking at that chart, I'm thinking, high side is the potential today. But 222 pips still takes us beyond the weekly pivot, so up to here somewhere. That's probably as far as you'd reckon this is going to go today, if it does go, of course, given that we've also got the monthly pivot there. We've had the Fed announcement overnight, of course, and got to be honest, I didn't listen to it. I didn't read it. Do I care about it? Well, I saw the number posted, which was a 0.75% hike. The market was expecting 0.5%. Some were pontificating that they might go 0.75%. They did. And funnily enough, the US dollar came off at that point. As you can see, the pound rallied, and so did the others rally against the dollar. Look, once upon a time, if a currency's interest or a country's interest rate was raised by 0.75%, and I think this is the highest in quite some time, the biggest rate hike in some time. Ash has probably got the data on that. We'll catch up with him shortly. That would send the market just absolutely crazy. And of course, you can say over the last few days that's been priced in. And I think to a large degree that is the case these days. And that's why we're not seeing these big moves in favour, if you like, of the interest rate increase. Rather, we're seeing potentially the reverse, certainly here, but maybe the market catches up with this. I don't know. At this point, you'd be thinking, left shoulder, head, right shoulder potential. Ash will have a thought process on that one as well when I bring him in shortly. So that's the pound versus the dollar. I don't want to trade breakout, but I am considering refining this again. So I might, Ash and I might get together over a beer at some stage and talk about what is best to optimize this at the moment and see if we can make something of it. Good day, Lewis. How you doing, bud? Hope you're well. So that leaves us with a nothing there at the moment, but I do want to come back to this chart. That's going to look pretty good on a 4-hour, I would imagine, for an inverted head and shoulders. Yes, it does. Not only that red line on my chart is significant. Why? Because the price has refused to go below that well. It's dipped below it, but hasn't closed below that level since 2016. So we're going back 6 years. And why would I think now is the time that that's going to break? Okay, I do understand that we're in different times, most definitely, but then we probably were there as well. We're in the middle of Brexit there, 2019 in June. I can't quite remember the circumstances, but that massive bar there in February of 2020, we know what that one's all about, do we not? COVID, yes. And here we are again, war. Mm-hmm. Funny thing that we seem to get there in interesting times, do we not? So I'm considering this to be a buying zone. As Gary correctly points out, we do have in, I think, probably about 4 hours from now, I haven't had a look at the times, but it's normally around about 12:30 London time. The MPC, Monetary Policy Committee of the BOE, Bank of England, will be meeting, and their rate statement will come out as well. So this could be subject to that, one would think, but there's probably other things at play as well. I can't imagine this is going to go crazy before that announcement, but who knows? I won't be around, I'll be in bed, but if this does look like shaping up as a buy, and the announcement doesn't do anything to disrupt that, then perhaps this is a buy. We shall see. Certainly, I'm getting that impression that inverted head and shoulders is certainly the structure that I'll be looking at the moment at a strong support level. So there, let's leave the pound alone and go to the trades that we are in. Now, I think you guys should be in these trades from last week. We're still in 2 of them. Euro dollar, maybe you're not in euro dollar, I'm not sure. Euro dollar, we entered euro dollar up here somewhere, maybe on that bar there, as I recall. No, it wouldn't have been on an hourly chart, would have been on a daily. Oh, yes, that's right. The clear false break. So we had the top of the channel, which is also a trade line. Actually, the trade line's coming from there through there. I better point it out properly to you so that you can put it in your little black book if you like. I'll get rid of the channel. So this was an absolute classic slingshot setup where we had break of trade line. We're in a downtrend, don't forget. Break of trade line, consolidate above it, break back below, retest. We called this a long time ago before it happened. So we put our entry there, stop loss there, and we've taken 2 lots of profit at this stage, trailing that on support and resistance really at the end of the day. And this is our 3rd bank on that. So if price does come back and take us out, we've got 3 lots of money in the bank on euro dollar.
Sorry to cut in, mate. There's a trade on the FTSE.
Righto, all yours.
It is for a short. Let me just get the screen. Let me got some time here. It's quite gentle at the minute.
Gentle. That's a new word, mate.
Well, I think you're right about the state of play today. You know, with the Bank of England out, so this one may or may not work out because of the Bank of England, but there is a short setup really kind of going on here. You can see the monthly pivot. Sorry, the daily pivot hasn't quite been tested, but you see this price here has been tested. So difficult to see why the FTSE would rally from this particular point. It looks like we are looking for further downside. Mine is a hedge. I've got a long position here, a long one here, but I've got a short up here as well. So it's really hedging out this position here. But I don't see why we wouldn't at least come down and test the lows. Though the statement yesterday was gonna, it should be quite negative for stocks, but the market rallied off the back of it initially,
saw that.
Which is interesting. It's like literally just kind of like looking for any reason just to kind of buy the market up. And the statement that kind of seemed to change things up was when Jerome Powell came and said that the potential for further 0.75 rate hikes or even 0.5% rate hikes would be unusual. The next one probably will be a 0.75, but after that, they'll probably be quite unusual. So the market seems to quite like that. But the bigger picture is that, you know, we are going to be choking growth. There's no two ways about that. There's recession concerns have really started to kind of fill the stalls again now. So I think we probably are headed for lower.
It does look very suspiciously like a short covering rally, does it not?
Yeah, it does a bit, maybe. You know, there's an inverted head and shoulders here as well, and actually the right shoulder is higher than the left shoulder, which is usually quite bullish. So this might well, decide to kind of go higher, but it depends on how you trade. If you trade in a similar way to me, then it doesn't really matter if it does go up, because ultimately the overall view is going to be for downside, and it's just then building into a position down anyway. But I think we probably will come down today. And the other thing about it is that now the Fed have moved, what are the Bank of England to do? I mean, they're in a different position in some respects. You know, they've got to kind of try and curb inflation as well. And the Fed have basically said, you know what, that is the only game in town. We can't affect the supply chain issues. We can't affect the conflict in Ukraine. But what we can try and affect is the labor market effectively, you know, and it's almost that what they're trying to do is slow down companies so they don't have the same need to go and employ so many people, because that is what's pushing up wage inflation. So what we're really looking at, you know, if anybody's really interested in the data right now, one of the things, a few things, obviously, the core CPIs are always going to be important, but the thing to really focus on is the job openings. You know, have a look at the job openings, and where we would normally sort of like go, let's look at the unemployment data. That's not going to be that interesting at this stage. What's going to be fascinating to watch is the job openings, because if the job openings start to decrease, then we can see that what the Fed are doing is starting to work. And if what they're doing starts to work, then they can start to slow the pace of what they're doing down. But I think they're going to be looking at a 4% rate hike, 4% by the end of the year, or certainly sort of like into 2023. So they're going to be a lot higher. Hi, Lewis. How you doing, buddy?
That's going to hurt a lot of people.
Yeah. Well, it absolutely. Where recession is you know, it's on, but it's always a question with this stuff is that you can have all this negativity like we've currently got. You know, we got a lot of problems kind of going on. FTSE's not the best one to look at, but if you look at the Nasdaq, it tells you kind of, you know, what the reaction to the negativity has been to this point. And then the question comes in, when does that get priced in? So if we look at it and say, well, it will probably get priced in when the situation genuinely changes, because at this stage it hasn't. So we're still heading in the same direction. The Fed is still heading in the same direction. Inflation's heading in the same direction, and all the causes that they can actually affect are heading in the same direction. So until we see something there, then I don't think the stock market has got anything of substance to kind of like, you know, build a foundation. And without the foundation, it's unlikely really to turn this trend around. Yes, it could rally, because what we see is that investors are just trying to look for something, you know, just give us an excuse to get into this market, as we saw yesterday. But it's just not it's not sticking. Gold market, really interesting, mate. You were absolutely right. As it happens on that day, look at that. The day after you and I spoke, and I did get into a long with gold here, and I'm holding the position right now. But it was a pretty bad move to the downside on Monday. And look at this pattern. This is one of my favorite patterns. And really, I should probably react on this, and I may well have to at some point. But this is a pattern that I noticed. You won't find it in any books, but it's a pattern that I noticed because it's got the look of a morning star. It's got a push down, it's got a small bar, and it's got a push up. But when it doesn't push up more than 50% into the first bar, I call this a false dawn, and a false dawn is bearish. you know, because we weren't able to kind of really take back anywhere near enough of the price action of this bar. And the short was really on. So gold's looking pretty negative, mate. The only reason I haven't done anything with gold is that I still look at gold and I still don't know. I don't know its function, you know, and because I don't know its function, because we had CPI data making it rally, and then when we effectively reversed that rally on the Monday, really off the back of expectations of a 0.75% rate hike. That 0.75 rate hike came in, and actually gold rallied to a point. You know, it did okay. You know, the actual bar, if you were to take it in isolation, looks all right. But the price action in on the whole looks pretty negative. But because of the seasonal aspect of it, because of the COT data, because of the fundamentals, which I think are a little bit murky, I'm just going to hold on to the position. And actually, normally I would have bought again, you know, down here and probably had, you know, probably sort of like potentially even close the position when it came back up to half. But I'm a little bit nervous about doing anything too shallow. So what I'm really waiting for with that is to see whether, firstly, it just, you know, it does what I want it to do and just pick up on its own, or secondly, give us a proper move to the downside and let me pick it up again back down here. So just, you know, which is unusual. Say it's unusual for me. I'd normally pick it up on route, but I probably won't. Because gold's quite expensive to hold, actually. You know, when you sort of think about the swaps and everything else, it's just it's not really the best. It's not the best thing to kind of get involved in. So so for that reason, I'm just going to leave that one alone. You know,
I was going to say, I think it's best left on the shelf at the moment, isn't it? It's
really I think it
tough.
is, mate. I
really
think it is.
tough.
I wish I'd listened to you on Friday and just stayed away from it.
Well,
do you know what? I'm becoming like you as well, mate. Where
sorry.
It would, yeah. Do you know what? It's the pattern, and actually, you know, I think you and I are of the same mindset with gold, where it's just too difficult to trade for us. You know, I don't know whether it just doesn't suit our personality. I don't know what it is, but I've had mixed results from gold. It doesn't do what I think it's going to do, and I don't think it's because it's because there's so much manipulation behind the scenes that it's just a very difficult product to get a handle on why it would be driving and what's driving it, because inflation really should be sort of like taking this thing to the upside. With the dollar starting to rally again, let's have a quick look at the dollar, and yields kind of pushing higher again.
Lewis, is your thing urgent, mate, or can you wait till Ash is done with this?
Lewis got a trade?
I don't think he's got a trade. He just wants to point something out on the NASDAQ.
Oh, okay. Yeah.
Which is great. We'll bring him on camera.
Yeah, fantastic. That'd be really cool. Mate. Okay, I'll finish with this. Just because of the yields are like pushing up and the dollar pushing up, then obviously gold will suffer from that. However,
sorry, what chart's that?
This is the weekly on the DXY.
Oh yes, right. Okay.
Now, when you look at this, mate, what's your first thought in direction? You know, in directional, the direction of it.
Yeah, my first thought is the cycle's completed, and we're waiting on a new cycle.
Right.
So that would probably lead to downside.
Right.
But it's so strong. It's so strong. Yeah. It's so hard to pick that up and trade it.
But you know, this is another reason that I quite like holding the gold position. I'm quite happy to hold the gold position and add to it if it comes down, because these moves, as we know, and as we've seen time over time, are unsustainable. You know, they just do not hold these levels. They eventually turn around, and when they turn around hard. So if we think about this, I mean, this is a monthly. This is as high as it's been for, forever, pretty much. I mean, that is the possible area that this gets to, which is around about 110. It's about 19, 110. It's currently at 15. So we're looking at what, another 5. So what, another 4% move or something with the DXY? 4% to the downside with gold leads us actually somewhere near these lows. somewhere near these lows here. So I'm just going to hold on to it, because the thing is, if the dollar does tank, everything's going in the opposite direction.
Yep.
I don't know about currencies, because if the dollar tanks, does that actually sort of like go right the way through the whole world? The Swissie's likely to do very, very well. Solid economy, good trade balances, and an economy which is nowhere near in the same difficult position as many others. But the pound, don't know about the pound, but gold definitely, gold will just reverse and go. So my philosophy with it is, don't over leverage it, don't over risk it, add the positions, and if it comes down, add it again. What I do know is that it's probably unlikely to go beyond the level where it costs to mine it out the ground. So I've got some room, but it does mean that I can't get in shallow positions. I've got to let this one breathe a bit and come down if it's going to do it. So that's what my thinking with gold.
Yeah, look, it's super interesting, really, really, and it's more interesting to me because I don't trade it, but I want to trade it. And what I'm seeing lately, especially that one we talked about on Monday, and the one thing I can tell you about that pattern is it works so often, but I don't know what happens next.
Yeah.
All it means, if you go back to that chart, the daily chart, was it?
Yeah.
When you see those three little Indians like that, so false break of a range, false break of a range, false break of a range, 3 in a row going up, each one is higher than the other, it will break the range to the downside, but it's uncertain after that what happens next.
Right. Interesting.
And typically it will do it exactly like that. It'll just smash straight through it.
Yeah.
But now that looks to me like a break and retest of the range.
Yes.
But also you see the high on the left-hand side of the chart.
The high, here.
You go right across, it's an intermediate high, go right down to your left.
This one?
Yep. And extrapolate a trend line through the next swing high after that rally. Yeah,
this
there.
One here.
Yep.
Oh, this one here.
No, the one you had, first one. That one. Yeah, where you are.
Okay. I'm watching Zoom because Zoom's slightly behind what I'm doing. So it's here, right?
Yep.
Yeah, look at
so
that.
that's a massive clear false break, but it's also a break and or a retest of that line. Yeah. And that's where we are at the moment. So that's why it's super tough to trade.
Yeah, I agree, mate. And do you know, when I sort of consider gold as well, when I look at this on the weekly, on the monthly, this area here right now, I mean, the trade's a little bit higher, but this area here right now is definitely, this break here comes back into this area, sort of testing the previous high close at this point. The next one down is potentially here, actually. But yeah, probably down there. But then the next one down is here, and then the next one down from there is probably this trend line. So
yep.
This is why I think getting in shallow is probably not a good idea, because there's quite a lot of room to this point down here. We're looking at 1350, as a potential drop, and who knows, if it's later in the year, it might even meet this particular trend line. So I think 4 positions on is really what I'm calculating. And because I want 4 positions on, I don't want to be messing around in these areas to clear out. So I mean, and as I say, I probably should clear out. But the reason I'm not going to clear out is really because of this. I just don't. This is just too aggressive to potentially hold at these particular levels. The dollar. Investors want to get rid of dollar. There's no, from what I see. Let me just check the FTSE, because the FTSE has potentially given us some profit here anyway. Oh no, not enough. I want to see this really better. I mean, that is first contact. If you're trading that way, I wonder if I should take it out of first contact. Actually, I'm going to take it out of first contact only because I'm just going to stick with the with a broader strategy here. There we go. Let's close that off. I'm just going to take that one out because even though I think it might well come lower, I'll do something else later, and also because the Bank of England are out later, and this might mess around a little bit. So just a little winner for this morning, mate. Nothing spectacular, but it gets us moving anyway.
Cash in the bank, mate.
Yeah, money in the bank, which is what we need to cover this gold position. So but yeah, so it's this, mate. This is the reason I won't get rid of that gold position. This is the reason that I don't know when it's going to turn, but what I do know is that it will turn, and I say very few things with certainty, but Bitcoin, Nasdaq, this will eventually happen. You know, all of them eventually reverse. What did people think during this particular period? The dollar's going to keep going, it's going to keep going, and then bang, it comes down, and it comes down hard. So eventually...
Have a look at the pattern there, mate.
This one here?
Well, just before it came down off that rally.
This one here.
What precedes that? Three highs?
The false... Yeah, you're looking at the three little Indians. Okay, so if we're looking at that, then are we looking at 1, 2, and then maybe something over here?
May well be.
Well, that might well take us right up to this this particular point up here. You know, the 110, 110 area, which is, I say, I'm okay with that. I don't mind. I don't mind holding positions in negative territory if I've got some belief that it's going to turn. And I do. You know, the other thing is when there's so much negativity and so much uncertainty out there, where do people put their money? I mean, yes, they're driving towards commodities right now. The current three, I don't see the current three. I see one, this one. If these are 3, 1, 2, 3, I see another one here, and maybe another one, but I don't see another 3, Lewis. So I guess they're probably there somewhere.
Yeah, they've really got to break a range, and that range is probably only just establishing now, I'm guessing.
Yeah, quite possibly. Unless you're looking at this, I suppose is the other possible thing. But I don't know about you, mate. But I actually think that that we might be in that kind of trickier phase of the phase right now. Because it's come down so low and you know, this has gone so high, we're in that trickier phase where the trend will tend to continue that little bit longer, but it becomes more dangerous and a little bit more nervous to kind of like get on board with it, because these trends are starting to look quite mature. They might not be. We just don't know how long this goes. But that we've got these kind of these factors that are in the background which suggest that maybe this isn't so mature. The Second World War lasted 6 years. Now, I don't think this thing's going to go on that long necessarily, but you know, we're only, as we said the other day, this is what 3-4 months in. So so this could drag on and on and on, and if that's the case, that would suggest that inflation stays elevated, growth starts to shrink, which again takes us back to gold. And we don't really sort of like have a situation where the Fed can then come in and reverse policy. You know, they're going to be moving towards a more aggressive policy. Whether they can get there and wait, and that's when we start to see things start to pick up again. Who knows? But I think we're quite young in this whole. We're quite early in this whole cycle. So things don't look particularly positive at this particular stage.
No, I would agree with that 100%. And I'm more than happy to be short the Nasdaq and the euro at the moment, I've got to say, but we'll see.
Yeah, well, and the yen.
Yeah, yep. If you go back to that weekly chart, just point out what Lewis is telling me. There is and I did see it while you were on it, there is a big cup and handle sitting there.
Oh, yeah.
But, you know, I don't know. I don't trade cup and handles, but that is massive.
Is there a handle, though?
Well, it's kind of a little handle, isn't it?
I mean, I don't know, because it might be, we might be looking at that and then
Has it formed yet? Yeah.
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 It's difficult, isn't it? I mean, I don't know if you were sort of like looking at, because the thing is with a cup and handle is, and I used to know about the maths of it, but I don't anymore. But I would suspect that there would be something with the size of this which would calculate the size of the handle. You know, the amount of bars along would have to calculate the size of the handle. This looks way too shallow to me.
Mm-hmm.
You know, I would have thought it'd
I see
be,
your point.
I don't know,
The other point I would make,
Yeah.
doesn't the cup and handle, isn't it? It's a bullish price pattern, but doesn't it occur at the bottom of a chart rather than at the top, which is pretty much
exactly. Yeah, exactly, mate. Yeah, there's no question. There's no question. But yeah, it's much more likely to be a bottoming pattern than something that you'd sort of like see right in the middle of an uptrend.
And I mean, that's what I was pointing out before. That cycle, you know, if you put your vertical line in after that first rally off the bottom, a vertical line.
Sorry.
Yeah. So this is what I harp on about all the time. And it's very, very difficult to see whilst it's unfolding. But once it gets a rally on, that's it. And you know, that's your cycle. The cycle's complete. That's what I said before.
Yeah, you're right. Absolutely right, man. Well, that's 54, and we're currently at 63. So it's long in the tooth, isn't it? I mean, there's no. I think investors want to kind of possibly come out of these positions, but it's just, you know, there's no reason to.
No.
Yeah. So what about the NASDAQ anyway? So Lewis has got a
yeah,
comment.
Lewis, what do you got, mate? What are you seeing? I mean, I hope you're seeing more shorts, more downside.
Are you still in that short, mate?
Yeah, mate. Yeah.
Good stuff.
Today's the reckoning day, I'd say. I've got my stop trailing round about the DR2 mark, and I expect either to get a fair bit more profit today or I'll get taken out.
Yeah, well, the market is not happy. The market is definitely not happy. You know, FTSE continues to ease to the downside, which is, you know, it's going to be a little bit of an indication of what's going to be going on with US stocks. It might actually come down to that point there. Looks like that was quite a bit earlier, but maybe down here before it starts to find some sort of bottom. If it does at all, I mean, the market looks sullen. It looks really sullen. And it's interesting because every single rate decision that we've had over the last 3 has caused a market rally and then an almost instant reversal, which is, again, what we're seeing today. But what do we have today? Anything in the way of data which will help this out? Philly Fed manufacturing, Bank of England isn't going to have any kind of huge impact on the market. The Swissy is there. The nothing there. What have we got tomorrow? Powell's out tomorrow. Nothing really. There's nothing else that's on the cards that would suggest we are going to get anything in, you know, to show us some relief of the numbers.
No, we've got the Swissy and the pound today. That's it, isn't it?
Yeah, exactly. I mean, you know, if we're thinking about the Fed, I mean, if we're thinking about whether the Fed actually are likely to do something with policy, change policy, or, you know, start to slow down, then no US numbers that I can see would start to point us in a direction of some easing. So the sentiment's down, and there's no real reason to be thinking that anything else is going to happen for the next 2 days.
Speaking of which, that's what Lewis was referring to, the sentiment cycle on
right
the NASDAQ daily chart.
Okay, on the daily.
Mm-hmm.
Yeah.
Don't be like that, Lewis. It's got to go lower, mate. It's got to go lower.
Okay, so refer to the daily sentiment cycle. Okay, all right, let's pull that up. Right, the sentiment cycle. Let's put
Maybe
this
I'm
on.
looking through rose-colored glasses, but I'm not. I don't really see it, to be honest.
What which phase are you referring to, Lewis? What do you think?
Oh, I forgot to tell you guys about that. Bit too late now.
What's that?
I just hit TP1 on Euro. Wow, very nicely on Euro Swissy. Wow.
What I mean?
Okay. I'm a fair bit wealthier than I thought I was a minute ago.
Did you put more on than you thought?
No, no, I was pretty confident. But anyway, we'll talk about that later. Have we had news?
Euro down against the Swissy. Well, do you know what? I mean, the only thing that would create this, let's have a look at this. If this is a Swissy story, Swissy up there, Swissy up there. Okay, could be a Swissy story. And if it is, the expectation was for 0.75 net, you know, just to leave interest rates at where they were, leave them at 0.75%. It's possible.
News, right?
Yeah, it's possible that the Swiss they've come out and, you know, maybe intimated that that's not going to be the case, and they're going to be actually moving, you know, to raise it to 0.5% or something like that. If that's the case, then the Swissy will rally, because the, you know, expectations were for them to hold, and they've got some room to hold. You know, they probably shouldn't, particularly with the net. But this is the thing: we had the Fed yesterday, and it was only really in the last week, within the last week, that all of a sudden the idea that the Fed would raise from 0.5% to 0.75% transpired. We didn't know that was going to be the case. We thought another 0.5% move, and then all of a sudden it was a 0.75% move. So that could well have a knock-on effect. I mean, I don't know how nimble these guys are, but it's possible that, you know, Jordan's pulled them all in and said, look, they've moved, or last week they said that they've moved more than we thought. We are going to have to move. We don't have a choice. The SMB are quite happy for the Swissy to be weak. They don't mind that the Swissy being weak. In fact, that they almost want it to be a lot weaker. But they probably don't want it to be so weak that they are paying more and more for imports. Their inflation rate is actually south of 3%, so it's not anywhere near as dangerous as the rest of the globe, pretty much. But there could well be a question that they would get left behind. We might see the same with the BOJ. You know, you just don't know. So that this might be to do with that, mate. And if it is, then we should be jumping on board with the with the Swissy. So we need to do some research and figure out what's going on with this one. Well, you're already in, so you're dandy.
Yeah, and surprisingly, it just gone so fast. And I was only had a pretty small risk on this.
Well, yeah, I mean, this is a daily chart. I mean, you know, this
I actually traded on a 4-hour chart, isn't it?
Traded on
I can't remember now.
That's really good, mate.
Oh, there I go again. There's more.
Looks like you've already got a 4% move.
Yeah, I've just taken the second lot of profit as well.
Good job. Good
So
job.
everything's for free now. That's good. Nice.
Well, and the FTSE's tanking as well off the back of that, and I wonder whether is the Nasdaq doing the same thing? You know, it's much well. So you've got a nice Nasdaq short. You've got a Euro Swissy short.
Yeah, if you're in yes, Euro dollar, Euro Swissy, Nasdaq. I've also got pound Kiwi short, which hasn't triggered yet. But yeah, everything's looking good.
Well done, mate. That's really cool.
And that was all in the Telegram group. So you guys would have got that this morning if you're in the Telegram group. But this is a cracker, this one.
Oh yeah, it's a great job. Don't see anything on breaking news. Let me just see whether that's oh no, there is some breaking news. I'll just wait for these adverts. Here we go. Yeah, the squeeze is now coming, isn't it? Here we go. 5, 4, 3, 2, 1. Right, breaking news. S&B raises the rate by 50 basis points to 0. That's what it is, mate. They have moved higher than expected.
Nice.
Yeah.
Wow, this is a pretty good trade. looking good.
Well, you want to, yeah. I mean, undoubtedly worth sticking in that. I mean, that is a huge deal, isn't it? Even the dollar. Look at that. Even the dollar is suffering against the Swissy. And the Swissy, I'll tell you, mate, it is, out of all the currencies, it's the one that I like the most, because I just think that their economy is just being very well run. It's the pound Swissy. Look at that. Yeah, everything's on the move, and everything's on the move negatively. So he's probably likely to collapse even further here.
Sorry, guys, I'm a bit distracted. I don't want to give any of this back.
No, and you know, I won't ask you what you're going to look for, mate, because it will start to distract you. But okay, well, let's just have a look through the charts and see what might well be the case with this. So we've got against the CAD, that area looks like it could well be tested. Against the yen, definitely the highs would be achievable. Probably quite close to it with the euro. Currently through a trend line on the euro.
All right, I'm all sorted.
You done?
Yep.
Okay, mate, well done. I tell you, this will be an interesting one, won't it? We just had the Fed moving more than expected. You know, the S&P really did blindside the market, because they've just come out and potentially just changed what they were going to do. What now do the Bank of England do? You know, is it the time now to kind of like take advantage of a potential trade long with the pound as well? Because they're all going. You know, they're all definitely on the move. S&P can't rule out further ups in rates, so they have all of a sudden got a lot more hawkish.
Wow, this is tanking big time.
Yeah, that's a great job, mate. That's a great job.
Yeah, that's a really nice way to finish the week.
Oh, it really is. No, nice quick move as well. I suppose the
I didn't even realize it had triggered.
you know, the interesting thing with the Swissy is that I think if you were an investor and everything was the same price, you'd probably be going towards the Swissy.
Yeah, we were speaking about that. Was it last week or Monday? I can't remember. But I was more prepared to go with Euro Swissy short for that reason. I thought it was a good play. And now, obviously, it's been assisted greatly by the SNB. God bless their little cotton socks.
Yeah, that's a proper move, and it's lovely, isn't it? Because you know you don't know what, and this is my point with gold. You don't know what's going to trigger the move. All you know is that you've got either a setup or a sentiment or a reason to sort of like do what you're going to do. But you don't know when it's going to turn. You don't know sort of like, you know, what the velocity is. You just know that you've got a potential trade. And a lot of trading is to do with how you manage the money. It's not really, because we know that every trade that you enter effectively is random. You know, what's going to happen next is random. So after that is, you know, how then do you make money? If every trade is random and it's a flip of a coin, how then do you make money? Well, you make sure that the odds are in your favor because you're using your account correctly. You know, you're using the maths correctly to sort of to put things firmly in your favor. You know, making having a high percentage of winners is only one aspect of it, because
that's exactly right.
You know, because if you lose too much, when you lose, you know, if you win 90%, but you're only winning sort of like small amounts, but when you lose big, then what, you know, you're basically back to flat again.
Yeah, look, I really feel pretty bad about this for you guys, because I wanted to share this and I just didn't get around to doing it, but I better show you the setup just so you know.
Me two
You haven't got
shakes,
my
mate.
chart. have we? We're sharing your
No,
chart.
no
right?
chart yet.
Okay. So on the weekly chart, we were talking about this on Monday, I'm pretty sure, because it was on my watch list from Monday. I had CAD Swiss, Euro Swiss, and Kiwi Swiss all waiting for a lower high. And on the daily chart, we had the double top. And yesterday, we were presented with a lower high. Now, I hope that I've got this in the Telegram. I'm pretty sure I have. And when we got the lower high, I started looking at down the time frames. And here's what I saw. I saw a breakout. I saw consolidation. I saw a re-entry below the, not only the trade line, but the daily pivot and the weekly pivot. Then I got the retest. So my entry was there. My stop loss was above the daily pivot. So currently, thank you, Swiss National Bank, I've risked 45 pips to get 200. That's a cracker in like minutes, only minutes. Pretty happy with that one, I've got to say. And I have now banked twice some stop losses at entry. I'm really tempted just to close it, to be honest. But I've been given the good fortune. We'll see how far it goes. Yeah, that was a good one, mate. That was a good one. And a nice setup. Absolutely nice setup. I mean, that's just, you can't predict that. But yeah, you just got to trade it as you see it, I guess. I really hope that's on the Telegram group. I'm not 100% sure it is. Right, what else have we got? The euro is moving hopefully in my favor as well. Yeah, we're down at that bottom now. The NASDAQ, same. I'll just leave those because we've banked twice on those and 3 times actually, because if it hits our stop loss, it's three winners on both of those. Awesome. Nice week. Lewis, yes, by all means, mate. Come on in. Come on down. I'll give you some powers. Where are you? This control panel has changed. It really is difficult. There we are. Lewis. There he is. Right, mate, you should have the power to do whatever you wish.
Hello, buddy.
How you doing, mate?
I'm good, thank you. All right.
That's the shot.
Yeah. What a great trade for the Swizzy.
Yeah, look, obviously lucky to get that big move.
Even you get half of it, it's already very good.
Yeah, well, I've banked twice already, so
Wonderful.
if it follows through, all good.
All right.
And I'm still actually in the position at the moment. I'm still 6-1 my risk on the third position. So happy days.
That's good. Wonderful. Can I share screen?
Yes, mate. Go ahead.
Let me see. How do I share screen? All right. You can start. Okay. All right. Give me a moment.
I'm not sure John's
Can
in
you
the
see
room.
my this? Can you see this?
Hang on a second. I don't have. I can't see your screen at the moment. I don't know if anybody else can.
Let me see. Advanced share screen. Host only. Okay. All right. Can I share? I don't know. Let me see. Share. This will stop the screen sharing. Yes. Okay. Can you see this?
Coming. It's building. And
all right.
There we go. Got it.
Well, you see a NASDAQ weekly and the sentiment cycle, part of sentiment cycle side by side.
Yep.
All right. You see my arrow?
Yes, I do.
The little red arrow.
Yep. That's where we're at, you reckon, eh? Okay, that
Yeah.
looks a whole lot better. Yep.
I think I think you and I love to see this continue to the
Whoa,
downside, right?
100%, mate. Yes. I thought you were going to tell me it was at the bottom, and I'm pleased you're not. Yeah, that does look good.
Actually, I was thinking about this. You just give me a moment. Let me pull this out. I have another screen, which is actually the what do you call it, on the daily basis. Wow.
And
my
actually,
system
you know
is
what?
really slow.
If you think about the situation at the moment and try and imagine what the sentiment is without looking at the chart, it's pretty much right, isn't it? Because we're in that stage where the market may well go into the panic.
Mm-hmm.
So I kind of get it. Makes sense.
Yeah, right. The only question is that I am not very sure whether are we at this point now, or are we at this point?
Now let's go with the first one, mate.
Yeah, because
yeah, I see your point.
Yeah, because when I refer to the daily chart, it's very much looks like we are at this point. But when I flip it to the weekly chart, it give me it kind of like brighten my eyesight, kind of, hey, are we here? If we are here, then we have this much to go. And that is going to be very, very terrible to the market.
Yeah, that's pretty much a replica, isn't it?
Yeah.
I actually like it. It really looks good. And as I said, if you equate it to what the feeling in the market is at the moment, which of course is what this is all about, it does feel right. It does feel right.
Yeah. And
what do you think, Ed?
I think that I was just sort of like sitting thinking about what's creating like all these potential things, and the panic phase may well have played out, and the reason I wonder about that is because we kind of know where we are now. We know sort of that we don't know sort of how long this is going to last by any stretch, but now Putin's invaded Ukraine. We've got supply issues kind of going on. We know the Fed's on the move, so people are trying to reprice. And I wonder whether that sort of like that big flush to the downside is kind of now happened. So, the kind of panic has now happened. And even though we might well get a rally, which would suggest still lower, so it would suggest that, there is maybe a tip to the upside and then another dip as we kind of actually find the genuine bottom. That would make some sense to me. When we think about what causes panic, well, a lot of the time what causes panic is really uncertainty, but we're starting to get a bit of certainty. We know what the path is. We don't know where it stops. We don't know what the numbers are going to be, but we do know what the path is. We sort of know what's ahead of us in some respects. So I'm not sure whether we've got anything else left to kind of like create the panic.
Or only more downside, but
yes.
I take your point. I do see what you're saying, but yeah, who knows? War escalates. Anything can happen at any time, as you know.
Yeah, but at that point, I think when we and I suppose maybe it's a moving target. Maybe the whole thing's a bit of a moving target where right at this stage we've sort of like had that big flush out from what we know. Now, as you say, things could escalate and things could change, which would suggest that we might be at that point in a different part of the sentiment cycle. But and I suppose maybe even the sentiment cycle is a kind of like it's a moving assumption. You can't just sort of like put it on a chart and say this is where it's all going. You almost have to kind of like point out why are we in this particular phase. At this stage, we know sort of like, that panic has been formed from what we currently know. And if we assume that there's nothing else, then the rest of it, we can start to assume how the rest of it's going to play out. But if something else does transpire, then we know that the panic phase might be slightly different. We might be sort of like we might be slightly higher in the cycle right now.
And that is the question. even as we look at the chart, that was Lewis's first question. He wasn't confident that we're at the arrows, but maybe be at the panic point.
But do you think it's the case that we don't really know where we are until it's finished?
Because one reason why I think that it is this point, because you see, basically there's trouble everywhere, and Fed is going to looking at another further rate hike, and similarly to Eurozone, similarly to probably China or whatever, and that could create this part of the movement when that happened, 1 month, 2 months down the line. So that's my thinking, because I feel that this current panic phase is probably going to be for this yesterday's rate hike. I mean this morning's rate hike, and then after that you're going to recover probably in the next 2 or 3 weeks, when everything settles down. But when the next
sorry, mate.
Yeah, but when the next problem arises, let's say Russia going to do something crazy again, whatever, then this could be the next phase of the downside.
Let's think about why we would be in a panic stage.
Well, recession is big, isn't it? I mean,
what happens when we do hit the panic stage? Everyone thinks, "Oh my God, this is going to hell in a handbasket."
Yeah.
So I've got to buy it back, and that's what. I've got to get out of this position, right? I've got to get out of my long position.
Right.
Yeah.
So they actually buy it back, and that's what causes the panic. It's just going to hell in a handbasket.
Yeah. Yeah.
So I'm just not sure we're there yet, are we?
No, I think when you think about that like that, mate, you're right. And actually, we haven't had recession numbers just yet. I mean, is that when we start to get the panic? When actually the Fed's actions do actually start to have an effect on global growth? We do know global growth is slowing, but it hasn't slowed substantially. We haven't had like huge job losses or anything like that. So we think about the stock market like that. What's going to be? Does panic actually form off the back of some of the numbers? More to do with people's. We know wealth is eroding, but it will erode a lot quicker when there's job losses. It will erode a lot quicker, and we might well see. People talk about riots on the streets. We probably haven't even had anything like that yet. But are we waiting for that kind of thing before we say, actually, that's the panic phase? We know the panic phase when it really arrives.
Yeah.
I think I mean, and look, as I said, I'm maybe looking at this through rose-colored glasses as well, but I don't see panic in the streets just yet. I see a lot of talk. And I see a lot of, okay, now the media is starting to pick up on it, which is pretty much, what we expect well after the move has begun, right? The media are starting to talk now, and they're starting to say it's going down, 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 down. Look out, we're in trouble, etc., etc. And I think you're spot on, Lewis, where we are. I really do. I think it makes perfect sense to me. Because
the other thing is that looking at this area, right? When I reference this to some indicator, it's telling me that there's still a long way to go.
Yeah.
Yeah, I don't understand that squiggly stuff we got, but whatever. Whatever.
Yeah. Right. Yeah.
Sorry, you go.
Yeah, that's why I kind of like conclude that it should be somewhere around here, and it's actually give us a very good downside move, for another big move down here. That I think that should be very interesting to take note.
Yeah, well, today could be one of those days because we have had a trigger, haven't we? In the Fed.
Yeah, absolutely. Absolutely. And you can't really get a bigger institute which is going to trigger than that. But everything's coming down pretty hard at the minute. The FTSE's down now.
And with that in mind, right? I remember someone was mentioning that Bitcoin mimic this Nasdaq pretty closely.
Okay.
That's interesting, mate.
So
That's
are we
interesting,
gonna
yeah.
are we gonna look at like Bitcoin go down to like 10,000 or 5,000?
Well, it's currently at 20, and I wonder whether it could go down to 10.
How about zero?
I don't know about zero, mate. I mean, you know, I don't see why. You know, I don't see why we get to the point where cryptocurrencies all of a sudden become non-existent. I think that there's some further downside coming potentially, but I think that they are an asset class that you know, maybe their feet aren't firmly under the table, but it's a fascinating asset class, and there's you know, it is modern. It's future stuff going on. People are building things that have never been done before. The blockchain has never been used before. But I think what is quite
and
interesting
that's the key to it all. And we've been saying that all along. You know,
yeah,
it's not necessarily going to be Bitcoin, but it is going to be the technology behind it. I've never had any doubt about that. But how you invest in that has always been my question to every guru that we've had on cryptocurrencies. How do I invest in blockchain? Not how do I invest in Bitcoin or who flung dung. You know, I just want to invest in the blockchain because that is the technology that's going to drive the change.
Yes.
And nobody's been able to answer me that question yet, I've got to say.
No, it's just because I think because it's so broad, you know, the blockchain, and when you always sort of like find a company that effectively is specialist, you know, and unless you go really back to source like Nvidia, who might, you know, create the software, so might create the motherboards and stuff like that for the computers, then you are going to find it hard to sort of cover the whole umbrella of it, because you know there's so many different networks out there that you are literally sort of, you know, you're picking a network and hoping for the best. But it is I don't see it dying. I don't see it dying, and I still think that, you know, yes, it's in a terrible place right now, and the Celsius news the other day was even more damning for Bitcoin and cryptocurrencies generally. But I think it's come. Personally, I think it's just come too far. And
I mean, the lower it goes, the better off we're going to be, because if you got belief in it, let it go
exactly. And we've been
here before.
Buying
it again, you know.
Yeah, we've been here before, where the crypto market tanked and everybody thought it was over. Everybody thought it was done, and then all of a sudden it rises, you know, exponentially from a crazy level. So I'm not willing to give up the dream, if you like, or the chance that that cryptocurrencies and Bitcoin and the like actually do something spectacular in the next 3 to 5 years. But you are looking at that type of time horizon. I don't think you can sort of like say over the next few months that this thing's going to start rallying and everything's done. What you're talking about with the Nasdaq will ring true with this stuff. You know, there's no point in investing in cryptocurrencies at this stage, because nobody's investing in anything right now. You know, they're trying to get out of positions. Never mind trying to buy stuff, which is the most speculative out of everything. But yeah, things look pretty tough out there, mate. It looks like we're going to get a flush out. And as I say, you know, the Second World War lasted a significantly longer time than we've currently got. And I know it was potentially sort of a bigger deal because you've got more countries involved. But you don't know what's going to happen here. You know, Russia just built that bridge with China. Do we get a shift in the world order? So many things are possible from this particular stage, but certainly what we are currently presented with is a situation where inflation is pretty much out of control. Well, it is out of control. I think that, you know, if you define the term out of control, it's obviously something which is so far unharnessed. Well, the Fed haven't managed to harness it.
And they're not going to anytime soon. But let me give you another scenario that just occurred today, or was it yesterday? I can't quite remember, where I told you before that we've had a change of government in Australia, right? We've now got a Labor government, which is traditionally Labor's for the people. They're going to dish out money, etc., etc., etc. And they've started that already. They haven't been in government for like more than a week or so, but they've just raised the minimum wage by 5 point something percent, which is greater than the inflation rate was last print in Australia. It won't be next print, I'm sure. But I mean, that's fueling a fire.
Yeah. Yeah.
That's not going to be good. And if other governments,
it is exactly what they're actually trying to curb.
Yeah,
that's exactly what they're trying to stop. They're trying to stop wage inflation, really, and they're trying to stop wage inflation really by choking demand. So much so that businesses don't need to hire people. At quite the same rate. They're still coming back from COVID, and I guess sort of like when you put the all the aspects into where we are right now, then COVID's played a huge part, but the timing of this stuff has just been incredible, really. And I don't know whether this was part of Putin's plan, but if it was a very, very clever strategy by all accounts. I mean, the ruble's nowhere near as bad as it was. I mean, it's recovered significantly, and particularly if he demands that people do pay for oil in rubles. I know that was certainly banded around for a while, but it's I mean, the fact that the Australian government, I don't know why would you try and fight inflation by creating inflation?
Well, then I told you weeks ago they're not good money managers at all. The fiscal policy and the monetary policy is now going to be a widening gap rather than a closing gap. Yeah, and that's not good. That's not going to be good, and that's really given me cause to. I won't say be bearish the Aussie, but it certainly cooled my enthusiasm for the Aussie at the moment.
Yes.
And that will bring me to another question, right? Since the government is trying to curb inflations and prevent expansion, then will that actually put an end to a high oil price?
Yes. Yes, that's the idea. Know. Yeah, no, that is the idea. I mean, the idea right now. So what we've got at the minute, obviously, is a situation where the oil price is being kind of like pushed by the fact that one of the biggest suppliers on the planet is effectively choking the supply to make sure that they've got some kind of control over the narrative of the situation they've caused by invading Ukraine. But the idea certainly would be to kind of to cool off growth to the point where demand is diminishing, because that's all they can do. That's the Fed really. They basically said yesterday, you know what, we can't control this, and we can't control what's going on in Ukraine, and we can't control supply issues that are being from different nations to where we are right now. We can't control any of that. We can't help out the supply chain. But what we can do is try and curb demand. And if we can curb demand by pretty much pricing, certain things out of the market, then everybody's use will start to slow down. That's how it works, right? The way that they're going to curb demand is by making people think a bit more about how much they are using of things. Do they need to travel in the same way? Do they need to, leave the heating on for as long in the day? And if that kind of thing happens, then the knock-on effect is that prices will come down because there's not so much demand for it. So yes, that is the idea. I don't know whether it's going to work, but that's certainly the idea.
Remember some time ago, and I don't know what forum it was in, maybe it was with just we traders in a room with Julian, and he was adamant that oil being so expensive was a deflationary scenario. So maybe the higher oil goes, that may curb the inflation problem.
Yes, we absolutely will, mate.
His reasoning being, of course, that we have to sit at home and can't drive our cars, and we can't, or if we do, we haven't got any money to spend on groceries and things, right?
Yeah, because I mean, if we think about sort of, you know, what happens in places of extreme poverty, you know, that they don't buy the same types of foods that people that don't have extreme, they'll go and buy bread. They'll go and buy sort of like things that are very, very cheap. So in the end, demand will come off. Where people say, well, we need all this stuff. Well, you don't need it. You don't need it because there's always an alternative. There's always sort of like a way around it. You might need a bit, but you don't need the same amounts as we are currently consuming. You know, we've probably overfilled up with this stuff. You don't need a car. You can get around on a bus or a train or an aeroplane. Not everybody, I appreciate, but there's certainly people in cities. People in cities do not need cars. I would question everybody if they say they need a car. I think that would be the wrong word. They certainly would want a car, and it's a lot more convenient to have a car. But to say that you need a car in a city, I don't know. I don't know whether that would be accurate. I don't need a car.
If you're in a city that's got a good infrastructure, yes, 100%. I live out of town, obviously, on a property, so I need.
But this is the thing, mate. You see.
I've actually got 3 of the bloody things.
Yeah, well, people like you aren't actually causing the problem because it's the city that has the biggest consumption. It's the biggest area of consumption of this stuff. So actually, if everybody in the city decided we're not going to have any cars anymore, the problem may well be fixed overnight. You know, probably not, but it'd be getting close.
Your point is that people who live outside the city drive into the city, create all this pollution. They create all this congestion. They demand that infrastructure is built to house their cars.
Yes.
Whereas that's ridiculous. It shouldn't happen that way.
Yeah. I mean, but people, this is, and also there's a higher volume of people in a city. So you're living outside. That one car traveling around, you could do like, you know, hundreds of miles and it not have the same effect as 5 people that live in a city doing a few miles. Because as you say, they're sat in traffic. They're you know, they've got 5 times the amount of cars. They've got 5 times the amount of fuel. They're probably buying more expensive cars as well. I don't know, but they could probably sort it out by changing the infrastructure of the city or just banning cars for I don't know, a day in the future that everybody knows. Put on more buses and everybody knows, right? We're not having cars on July
electric
4th.
buses.
No car day. You know, because we've got US driving season and all this sort of stuff going on, but that is the idea anyway. In the end, people will find alternatives if they can't afford something, and you know, it's the lower end will get affected first, and they'll just eke out. The lower end will stop using as much, then the next level up, then the next level up, and it won't eventually get to the top because it never does. But it will certainly, like, you know, stop certain people, certain classes doing the things that everybody else are able to do, and it will curb the price in the end. So yeah, I mean, you know, what do they say? The best cure for higher prices are higher prices, and that's why.
Yep, there you go. Makes sense.
Yeah.
Whether it actually happens or not is another story. But yeah, don't give people more money at the moment. It's not a good idea. I don't believe it's a good idea.
No, I agree, mate.
We shall see.
I agree. No, but,
Lewis is laughing at me.
It's always the thing about free markets, isn't it? And it's always the thing about central bank involvement. At which point do you look at the central bank and say, you've actually been created to stop this kind of situation happening, and it's happening more and more. Is there actually any point to you?
Yeah, one job. You're there, mate.
Sorry, mate. I missed you then.
Because you were frozen for a minute, but you're good.
All right. Yeah. So
and
what,
I was saying,
what was your last?
Yeah, they
point?
got one job.
Yeah. Yeah, they do, but you know, and I mean that genuinely. Is there any point to them when we sort of like see what's happening here, or would we be better off actually just letting things do their own thing? Because actually, somebody getting involved, it's almost like that you know, was it somewhere in Europe? In Europe, when they decided that they wanted to create more honey, and the honeybees weren't creating enough honey, so they imported African bees because they were a lot more active
Productive.
to mate
Yep.
with the honeybees. And all they ended up doing was creating this awful killer bee that kills all the honeybees, and it doesn't solve the problem. It actually creates a worse problem. It might have even been in Brazil when they did it. I'm not sure, but it's some part of the world where they imported bees from Africa, and it just decimated everything. Are we in a situation where actually involvement is not the best policy? The best thing to do is actually get rid of an institute and say, let the market figure itself out, because it does. It will in the end. You know, and if it doesn't, it's no worse than what you're doing, and we're paying you guys.
Yeah, look, nature has got this wonderful way of solving problems by itself. And I think if you put the word human in front of that, it does make things a whole lot more complex. I do understand, but the word nature is still there. So eventually it will sort itself out. I agree with that principle 100%. And I mean, we've got cases, I'm sure every country's got cases of it, right, where they've introduced a species, be it a plant, be it an animal, be it whatever it is, to control a biological problem. Classic case in Australia, we imported cane toads from somewhere. They're called cane toads because there was a problem in the sugarcane fields of Queensland and northern New South Wales. So the scientists worked out that the predator of this problem, whichever it was, I can't remember what it was, is the cane toad. So they imported all these cane toads from wherever, I guess from Asia somewhere. And now we've got a cane toad problem because they've eaten everything, not only the pest, but they eat all the native fauna, and they're poisonous. So everything that eats them dies as well.
Right.
Unbelievable.
Yeah.
So you've got this thing from the top of Australia coming down as they acclimatise to cooler temperatures. And you've got people walking around with golf sticks going whack on cane toads just to get rid of the bloody things.
Really, yeah.
Same thing happened with the European carp. We imported the European carp to solve a problem in our rivers. Guess what? We've got no fish left in our rivers. They're all carp. They're all European carp.
Right.
Because unbelievable. Humans are just so stupid.
Yeah.
You can't believe it.
Yeah. Well, I think, it's probably case in point to what's going on right now, mate. We probably should just let things alone, because in the end, survival of the fittest it worked in nature for millions of years, survival of the fittest. So why wouldn't they just let the companies that are best run survive, because they will, and the companies that are badly run or in the wrong industry just collapse? You'll end up with the same amount of companies. You just should end up with sort of like, things that are run better. You'll still get shocks like this, but we just seem to be getting more and more of them. And as I say, if we're going to get the same amount of shocks and the same amount of pain, we may as well do it without the Fed and the Bank of England and the S&B and the Reserve Bank of Australia, because we're paying those guys to do it. So at least we could save some cash there as well.
Yeah, indeed. Lewis is laughing at me because I've got pound Kiwi on the chart. The reason he's laughing, I think, is because I've got a short order in. But that's the only way I see this going at the moment. And the reason for that is on this, well, I suppose there's reason to think there's potential either way. But what I see on the daily chart at the moment, pardon me, is a break and retest of the weekly pivot, which is exactly what I'm playing at the moment. And I've got my entry under here. I've got my stop loss above the weekly pivot. If you want to follow that, I should have pointed out the other one. 1.9269 is the entry. And I've got a stop loss at 122 pips above there, which is above the weekly pivot. I don't know that I'm going to get a whole lot of downside. And this does look a little bit sentiment cycle to me as well. So perhaps I'm looking for an aversion point down here somewhere, Lewis. Perhaps that's what's on my mind. So I'm looking for that. You're asking me to look at dollar yen. Do I have to? Okay, that's coming back down. I expected it would test this high again. Big bearish
That's the
engulfing.
love of your life.
Yeah, I can't trade it. You know that. I just cannot trade it. It's impossible for me to get a handle on. Oh, one little, two little, three little Indians. Look at that. Oh, here's another bloody imposter. Okay. Now I'm a little bit more interested, Lewis. Trade it for me, will you? I'll pay you if it loses. I just can't have my name attached to this. It doesn't work.
Oh, yeah.
But yeah, I can see some downside here.
You need to trade it, man. You need to trade it.
Yeah, no, I'm not going to. I don't want to spoil my Thursday, which is panning out quite okay.
Possible now, mate, that expectations are for the Bank of Japan to move as well, which might might be why we could see the dollar come down against the yen. The yen actually might be. It is the next in focus, isn't it? Obviously, we've got the Bank of England, but the yen is the next in focus. Do we see some yen strength off the potential that they move? Because so far, there's been no whisper of them moving. Fed have now moved. S&B have moved. Are they next? If they are, the yen's going to rally.
Tough to trade, though, isn't it? Really?
Yeah,
tough to trade. It really is tough to trade. But tell you what, if on Aussie yen, I saw this up at the weekly pivot with a bar that looked something like that. If I could cut and paste that and put it over here, I'd be happy to trade it. Then you've already got a bearish engulfing bar, so potential reversal. You just need a good lower high here, and I reckon it's tradable. Aussie yen. Anyway, we could pontificate all evening.
Yes, we certainly could. Just Lewis, just on your the sentiment cycle stuff, mate. I really appreciate you coming in with that, because actually, I know you look at it, Jeff, but I don't really look at the sentiment cycle that often. So to be reminded that we should be looking at that as well is really useful.
And I think especially now, because we are really going through a sentimental phase.
Yes, and it's quite good, isn't it, to sort of have a reference point when you're looking at a chart to sort of like, so let's start with the sentiment. So it doesn't matter what you start with, but when you're looking at a chart to try and get understanding of where it's at, let's start with the sentiment cycle and see if we can get anything from that. Or let's start with seasonality and see where we are with seasonals. And there's so many things that are factors. And I might well see if I can add sentiment cycle into the analysis a bit more as well.
That's exactly why I look at sentiment cycle, because I kind of noticed that sentiment cycle was actually developed primarily for the stock market.
Yeah.
And now we are looking at the stock index, which is very relevant.
Yeah.
That's why when I look at the pattern, I say, hey, it looks very familiar. Let me take a look. Let me refer to the sentiment cycle, and when I put both of them side by side, I say, wow.
Mate, even I'm looking at stocks at the moment, and I just never have in my entire life, apart from I've been in a few funds, but never looked at them. But I don't think you'll get a better time in history, certainly in my lifetime now, where in the next, let's say, 12 months, stocks are just going to be the best thing around, I reckon, because as soon as this bottoms, you're going to be able to buy up for a long, long time, I believe.
Yeah, agreed.
Yeah. And I refer one more point. When Jeff was talking about Aussie yen on the downside, right? I remember Julian was saying that Aussie yen actually reflect on the stock market very closely. So if the stock market is coming down, Aussie yen should follow.
Yes.
Actually,
once again, it's your sentiment thing, isn't it? Really.
Correct. But which actually what Ash was talking about, yen is going to be strengthened, sooner or later. And Aussie is now looking at, what happened to the Aussie with the, all the happening in Australia now. So it kind of like, it makes sense to short it also.
Yes.
Yeah.
Yes,
I'm there. If it sets up, I'm there. Remember this.
Is that what Marcel say?
I can never do it because I'm looking in the mirror. I'm going to go there. It's the Miyagi trade, right? Wax on, wax off.
Yeah, that's right.
That's right. All right, we got to go.
We got to go. Thank you so much, Lewis. Really, really good to have you on today, mate. And just looking at we got the yen policy statement tomorrow, so I wonder whether anticipation of that might well see us buy into the yen today. Whether you want to trade around that particular decision is questionable, but we might see some yen strength just off the back of people feeling a bit nervous that they might have misread what these dovish central banks are doing. So there might be some near-term positions to be taken on yen upside.
Right.
We'll see.
Right.
And maybe it follows through if the Bank of Japan go with it. But I tell you what is interesting is that you could almost trade the yen long today and see if you've got a position to hold. And if they go, you've got in early. And if they flip, and if they stay where they are, the trade will flip around and you've basically got a nice hedge or a better position to get into because the yen managed to rally a bit. So I think the yen looks interesting for the next couple of days. Could be quite an interesting, probably the most interesting currency to trade from today, I would have thought.
I'll have a look tomorrow.
Yeah, good stuff, mate. All right. Well, thanks to you, mate. As always, been a fascinating session today. Thank you to Lewis. Thanks to the guys in the room.
Thanks for having me.
Oh, you're welcome, mate. Welcome. Always welcome, particularly with that kind of thing. And thank you to who was looking after us today. Was it you, Jeff?
That'd be me. Yeah.
Oh, thanks to Jeff for looking after us today, and Marcel.
Have a good weekend.
Yeah, have a good weekend ahead. Yes, I think tomorrow is a great day also. All right, see you guys.
See you later.
Thanks for being our trading buddies. See you guys. Bye.
See you guys. Bye-bye.